LTKM has proposed to sell its existing chicken egg production business to become an electronic manufacturing services provider in a major corporate revamp. This will result in not just the emergence of new controlling shareholders, but a name change to LA Technology. In a boss filing, LTKM says it has entered into share sale agreements with shareholders of EMS Business Local Assembly to acquire 100% equity interest in the company for 336 million ringgit. This will be satisfied by a combination of 100 million cash and the issuance of 393.33 million new LTKM shares at an issue price of 60 cents each. Notably, one of Local Assembly's indirect shareholders is Chin Hin Group Chairman Datuk Sri Tony, who is deemed interested by virtue of Divine Intervention's 20% stake in the company. Under the proposed acquisition, the vendors have also provided a profit guarantee for Local Assembly of a minimum profit after tax of 28 million for FY22 or not less than an aggregate of 50 million PAT for both FY22 and FY23. At the same time, LTKM also announced the disposal of its existing business to Ladang Ternakan Kelang for a total cash disposal consideration of 158.83 million ringgit. LTKM also proposed to undertake a special dividend cum capital repayment of 1 ringgit 11 per share and consolidate two existing LTKM shares into one LTKM share after the proposed special dividend cum capital repayment. In a statement, LTKM Executive Chairman Datuk Tan Kok said that the proposals seek to reward its shareholders from the proceeds of the disposal of the company's existing poultry business, while at the same time allowing them to continue participating in the new EMS business following the proposals. Tan says that the proposed acquisition of the EMS business is an opportunity to create value for its shareholders through a business that is viable and profitable. He explains that this comes at a challenging time for the poultry business affected by overcapacity, low average selling prices of eggs, and high raw material prices, among others. As a result, LTKM has been in the red, and this has affected its ability to pay dividends. Meanwhile, Local Assembly co-founder and managing director Chai Voon Sun said the listing of Local Assembly via LTKM means a realization of 2 decades of hard work and represents a step forward in the company's journey of growth and expansion. Local Assembly, which started operations in 2000, is a manufacturer of electronic, electrical and plastic injection molded components and subcontract assembler of electrical appliances and equipment. For FY21, Local Assembly achieved PAT of 20 million on the back of 116.35 million in revenue. Application for the proposals is expected to be submitted to the relevant authorities by the second quarter of 2022. LTKM shares were suspended for 2 trading days from 9 a.m. on Thursday until 5 p.m. on Friday. Its pre-suspension price was 1 ringgit 60, and year to date, the counter has risen 17.65%. While COVID-19 has devastated the aviation industry, Capital A Chief Tan Sri Tony Fernandes says that 2023 will be a good year for the company to return to profitability. Fernandes says that while he is not sure that Capital A will be profitable this year, he is very confident that 2023 will look very good. He adds that with borders reopening on April 1st, there is a lot of pent-up demand for travel, and he expects that most of its fleet of 200 aircraft will be flying by the end of the year. According to Fernandes, the group is doing very well in the Philippines and Indonesia, which he says is a big bonus. He was talking to reporters at the virtual briefing of AirAsia Super App and Google Cloud partnership. For FY21, Capital A managed to narrow its losses to 3.12 billion from 5.11 billion previously. This was despite a significant drop in revenue to 1.73 billion from 3.27 billion ringgit. The company ended FY21 with positive net cash flow of 725.8 million compared with a negative net cash flow of 2.2 billion in FY20. To recap, in January, AirAsia Group was renamed to Capital A to reflect the group's new business strategy as an investment holding group for not only its aviation business but also its logistics, lifestyle and financial services ventures. The 4 major Malaysian mobile network operators, in talks with the country's 5G single wholesale network infrastructure vehicle Digital Nasional, have yet to agree to key terms in the latter's recently published reference access offer. In a joint statement, the MNOs, Celcom Axiata, Digi Telecommunications, Maxis and U-Mobile said reaching an agreement with DNB and the Malaysian Communications and Multimedia Commission over the RAO is a key step before discussions on commercial access agreements can commence. To that end, the MNOs remain in discussion with MCMC to seek more clarity on some of the details in the published RAO. According to the MNOs, a recent analyst report may be read as suggesting that open topics between DNB and DNB's key prospective customers have been resolved, but this interpretation, they say, would be inaccurate. The MNOs opine that a majority of the prior concerns and issues raised and discussed with MCMC and DNB have yet to be adequately addressed in the current RAO, which includes key principles for the RAO to be consistent with industry best practices. The telcos say that the RAO in its current published form will not enable affordable and quality 5G services for the rakyat and businesses in Malaysia and will impede the acceleration of 5G services and penetration in the country. However, the MNOs assured that they remain committed to continued discussion with MCMC and the industry on the RAO and that they look forward to playing an active role in 5G implementation in line with Malaysia's digital ambitions. To recap, last month, the Malaysian government announced that its 100% owned DNB would retain the SWN model despite a proposal for a dual wholesale network model being put forth to the cabinet. PN17 company Brahim's holdings shares slumped as much as 8.5 cent or 74% to 3 cent on Friday after the regulator rejected its application for extension of time to submit its regularization plan. It was Bursa Malaysia's most actively traded stock, ending the day 70% down at 3.5 cent with over 191 million shares changing hands. Year to date, the counter has tumbled 44%. In a bourse filing, Brahim's had said that following the rejection by the stock exchange operator, shares in the airline caterer will be suspended effective April 15th. Brahim securities will be delisted on April 20th unless an appeal against the delisting is submitted before April 14th. It also said in the event it submits an appeal to Bursa Securities within the appeal timeframe, the delisting of its securities on April 20th will be deferred pending the decision on the company's appeal. However, the regulator will proceed to suspend trading of the company's securities on April 15th, even though the decision on the company's appeal is still pending. Kumpulan wang persaraan diperbadankan's net investment income for the year 2019 swelled over 5 times or 438% to 6.67 billion from 1.24 billion in the same period in 2018. According to the fund's recently published annual report for 2019, its latest reported net investment income between 2015 and 2019 was the second highest after the 8.8 billion reported in 2017. In contrast, 2018 marked its lowest net investment income for the 5-year period, given that net investment incomes for 2015 stood at 4.4 billion and 4.8 billion in 2016. In terms of total fund size, Kwang managed 147.5 billion in 2019, the highest over the period between 2015 and 2019. The increase was attributed to total comprehensive income of 7.8 billion and total contribution of 3.1 billion, said then Kwang chief Syed Hamada Syed Othman in the report. According to Syed Hamada, Kwang's fund registered a strong performance across all asset classes in 2019. Kwang's target strategic asset allocation comprised 44% equities, 45.5% fixed income and 10.5% alternative investments. As at end 2019, Kwang has 68.3 billion in equities, accounting for 46.35% of total assets, while total income realized stood at 2.3 billion, of which 81% was from the domestic market.